the opportunity around some of the technologies, including the agentic AI capabilities coming through, allows small organizations to potentially punch above their weight and compete with some of the market leaders in a way that they couldn't before. I find that people aren't as certain projects can be at pilot subscale forever because they're passion projects and people know that they should have worked and they don't quite know why they haven't worked. I worked with a client recently that had around 57 service lines and they'd applied an agentic AI capabilities to 37 of them and wondered why they weren't getting clear results. When I looked at the depth and breadth of the team that were trying to support all of those service lines, it was really thin. If you use this technology in the right way, you can drop 30% of your project management labor right now.
Hey everyone, and welcome to the Bricks and Bytes podcast, where we dive into construction and AEC technology. Before we get started though, if you're a startup founder or operator responsible for innovation in your company, or you want a deeper, more insightful look into technology in AEC, you won't want to miss our newsletter. From deep dives into particular technologies such as AI, robotics, design, software, and so on. Hot takes from investors betting big in AEC technology and advice on building tech companies, including the stories and takeaways of the most successful AEC technology founders. Head over to www.bricks-bytes.com and sign up today to get this exclusive material straight to your inbox. And now for the episode. Major construction projects are complex, and delivery leaders know that things rarely go to plan. The problem is that most teams don't see what's slipping or why until it's too late. The best construction leaders know that in order to deliver on schedule, everyone needs to be planning together, committing to targets, and tracking performance every day. By bringing look-aheads, weekly work plans, visual staging diagrams, and daily activity briefings into one multiplayer platform, AFEX gives the world's leading projects a single place to plan and coordinate their work. Join the largest contractors across Europe, the UK, Asia, Australia, and New Zealand. Learn more at aphex.co. That's aphex.co. In construction, precision matters. Every budget line, every schedule, every document. But too often, project data is scattered across tools and departments, creating risky silos. That's where ArcDesk comes in. ArcDesk is the all-in-one construction management platform designed to connect your entire project operation, from opportunity through to tender, all the way to handover. With real-time dashboards, cost control, scheduling, procurement, and document management in one place, ArcDesk gives you complete visibility and control. Trusted by contractors, subcontractors, and asset owners worldwide, ArcDesk has powered landmark projects from shopping centers to Europe's tallest buildings. If you're ready to reduce risk, protect your margins, and deliver projects with confidence, discover ArcDesk today and visit arcdesk.com, that's ARCH desk.com, and see how leading firms are building smarter with ArcDesk. All right, Darren, thanks for coming. So welcome back, Bricks and Bytes. We last had you on here. Well, actually, you had us in your time at Atkins Realis in the office in it was Victoria, right? Victoria Nova Victoria.
Yeah, that's right. Yeah, we had you in our innovation space there. Yeah, and that was a really good session. You guys had some tough questions for me, and so kind of interested to see what you have in mind this time for this catch up.
Yeah, we're going even tougher today, so I hope you're prepared. So, and during that time, you were the chief digital officer at Atkins Realis. So you're no longer there. So what have you been working on in the meantime?
Yeah, well, in going into the role at Atkins Realis, I'd come over from McKinsey, where I had a role as CTO for their operations business, which is a lot of their, if you like, their supply chain, manufacturing, automotive, and built environment type clients. And kind of working with a single client again, it was great because we could, I could own that program, set things up from scratch, get the agentic AI and AI strategy and the governance all sorted out at a really topical time across an organization, fantastic organization, 40,000 people. um, and operating in every continent, and you know, I think it was around 60 plus countries. So really good challenge. But what I noticed was that the pace of change in a single client can be limited by other things that are going on with that company. If they're going through an M&A strategy, for example, as Atkins Realis was, to buy certain market share in the US and so on, a lot of innovation resources can be competing with other objectives, and that could be in buying a traditional business, bums on seats to get larger market share. So for me, I kind of was finding that in my role, I was being asked to do things by third parties and give advice and guidance and work with private equity and so on, that I wasn't able to do as a result of my conflict of interest with
Mm-hmm.
my role. So I took an opportunity to explore working with private equity organizations, with startup organizations, uh, software vendors that are looking to scale, traditional software vendors that are looking to move into generative AI space. And so I wanted a little bit more diversity in my portfolio. And so I set up a company called AInvested. And since sort of doing that in the summer, I've been helping a range of uh, large private equity companies, some of them, in the sort of $1 to $2 trillion range, buy companies. We recently bought a company at 1 billion, which was quite exciting, and got
Mm.
involved in valuing that company from a digital transformation perspective. What would it mean to transform that organization? What would be the value of that organization if it was transformed, and how much should we spend for that acquisition? Do we want to win the deal? Like, often there are lots of bidders for a company that's up for sale, and you want to make sure you win, but you want to buy it at the right price. So what's the potential value of the company if it went through a digital transformation? And so I've been helping with that. And then if one is lucky, and we were lucky, or smart, as it were, to win the bid, it's then a question of like, okay, so what needs to happen as a result of that acquisition? What changes need to be made to turn that theory of the value of the company, if it was to start to become more digitally enabled? How would you execute that plan? What team do you need to execute the plan? What governance is needed to keep it on track and move it forward? So I've been involved in those sort of things during the summer, which has been great. And then in addition to that, I've been involved in advising some startup companies get to scale. Some of them are really successful, and they're getting a lot of headline coverage and investment coverage, but not necessarily getting the traction that they need to move through the investment hurdles that start to move. The barriers to investment and the expectations of investment get harder and higher. So kind of helping organizations figure out, well, why is it that we keep doing lots of projects, but we're not the enterprise provider to a company like an Atkins Realis or an Arup or an ACOM, or if it's in a different industry, and I am helping other industries as well.
Nice. So I think you gave us a little bit of a flavor of what we might be discussing today, which is private equity, and also maybe helping some of the startups that are at that sort of later stage, but struggling to scale and really get it to like that next level.
Yeah, and
Um,
there's something that's happening around the traditional AECs as well, and how those sort of mid-tier organizations, what do they need to do differently? I think that the opportunity around some of the technologies, including the agentic AI capabilities coming through, allows small organizations to potentially punch above their weight and compete with
mm,
some of the market leaders in a way that they couldn't before. So that's kind of interesting. So I have clients where I'm helping some of their boards figure out what can they do differently to compete in certain markets.
mm. Utilizing AI.
Utilizing AI, but also looking at where their intercept point is. So what is it that could be done to defend a particular market where they're seeing some erosion? What could they do to really be quite radical to compete in that market and dominate in that market, be
Okay.
be a leader? and or potentially grow into new areas where there is still opportunity, and perhaps some of the market leaders haven't been as aggressive as they could be in their thinking around how technology could, you know, transform the service.
Very cool. Okay, so you mentioned some of the stuff you've been working on, which was about like valuing how much it how much a digital transformation process would be in terms of like how much it would how much a company is valued at, how much the process would cost, what the value of the company might be once they've gone through this process, and then advising on the operations to actually deliver on the digital transformation. Is that right?
Yeah, that's right. And also looking at some of the sunk investments that have been made in those acquisitions. So what's in their current digital strategy, as it were? What's worked? What hasn't?
Mm.
You know, I find that people aren't as certain projects can be at pilot subscale forever because they're passion projects, and people know that they should have worked and they don't quite know why they haven't worked. And you know, I worked with a client recently that had around 57 service lines, and they'd applied an agentic AI capabilities to 37 of them, and wondered why uh, they weren't getting clear results. And when I looked at the depth and breadth of the team that were trying to support all of those service lines, it was really thin. And they were, you know, being very brave and valiant and trying to do a lot. Um, but I would say that there was a lot of, you know, a term I've used in the past, digital dabbling going on. So, not no real clear alignment between um, the key business priorities, the key markets and services that the organization either needed to grow further into and or defend because they were seeing pricing erosion and cost erosion through innovation, or just more competitive pricing or labor arbitrage, and not really knowing where to place those bets. And the guidance I would typically give is, you know, pick your top five initiatives at a business level that you really need to get right, and then work on the top three to start with, and get mobilized around them, measure results, see what's working, and build out from there. And for me, I see people kind of getting excited about digitally dabbling, and you know, can be a lot of merit in citizen development and decentralizing, and getting people involved in these things. Um, and that adds some accumulative value to the business, but really being precise about what would make a massive difference. How do you become a market leader or a regional leader in your chosen markets? What would you need to do differently to do that? How does the
Mm.
technology enable that? Who are the partners you need to achieve that? You know, what's your in-house strategy? What's your partner strategy? Are you buying? Are you building? And some of that clarity is not as mature as it could be. And so it's a great opportunity to kind of help clients that are at that point. They know something's not right, but unlocking that is where you know, where I find things to be interesting, and hopefully they can grow too.
Mm. Very good. Okay. So just to define then private equity. So you're advising private equity companies and they're buying a significant stake in a company and then they are that yeah, maybe what happens at that point? So private equity, does just like an AEC company put themselves on the market, or does a private equity company approach them because they have let out a signal to say, I don't know, we're doing something which then ears perk up in these offices and they're like, right, come on, we should speak to this company. Like, how does this sort of process start?
Yeah, um, I think that uh, there's a range of ways this is working, but essentially there might be a carve out. So the group company might be wanting to sell part of its business. It thinks that there's some value in selling that part of the business. It may choose to realize some value for shareholders or for owners, and it's generated a particular offer and service line, and it can logically carve that out. And that's where venture capitalists or private equity or an M&A activity would come in. So there's been quite a lot of consolidation at the global leadership level between various global leading AECs, Atkins Realis, Arup, ACOM, Jacobs, and so on. There's been some trading. There's been trading of oil and gas services. There's been trading of nuclear services. There's been trading of power and distribution, consultancy businesses being sold off, consultancy business being acquired. And so there's a general consolidation coming in, and private equity have seen some good compound annual growth projections in our industry. Infrastructure investment continues to grow year on year. I've been quoted around the predicted value of construction industry being around 13.9 trillion by around 2035, 37. So for me, and those are references, say, from Oxford Economics and other thought leadership organizations. So for me, there's definitely a lot of money going in to infrastructure, to powering society, and with climate change having huge impacts on us day by day, and that becoming more of a reality, a lot of the infrastructure needs to change. And so, as a private equity company, it's a pretty safe bet. You can buy a traditional business, you don't have to transform it so much, and you will make some money. So we're seeing a lot of external investment come into this area, and there are those mid-tier companies that perhaps are struggling to compete, and so they have their own exit strategies. They might want to sell and get involved in some of this investment that's coming in. And so there are different exit reasons why a company might want to trade with a private equity company. But essentially, they're trying to do something that they can't do on their own. Right? They need more money. And it goes back to, if I just step back from AC, some of my clients are software companies, and there might be a legacy company that's now refactoring around Gen AI and some of the technologies that are out there in terms of what's their platform, what platform can they adopt, what do they need to build that's proprietary, and there are probably a big shopping list of things that they want to do, and not enough investment from their own revenues and the profitability that they generate to fund that pivot that they've got to do. So they'll engage with private equity companies. It's like a dating exercise, and they'll try and understand, well, what money look like. The private equity companies say, well, what would you do with the money, and what would be your return? And obviously, there needs to be a reality check somewhere along the line to make sure people receive money and can deliver against that promise. But they're not selling themselves too short or selling something that they can't achieve.
Yeah, Darren,
Does
this
that
is
make
like
sense?
it
Like,
makes sense.
it's simple, but
Yeah. So what I got from this is that a company, an AEC company, maybe a technology company might say, here's something really cool we want to invest in. I don't know. Let's just say like new technology. AI is all the buzz at the moment, but we just don't have enough capital or resource in order to purchase or do this thing that we want to do. So they would approach someone like a private equity company and say, hey, we need $10 million and we're willing to give up X% of our company, which you will get, and you give us the money, we give you equity, and we'll go and build this thing. And I guess in some capacity, the private equity comes on maybe into the board or as advisors or operationally to help them deliver on this thing they're looking to
the
invest in.
private equity rarely gets involved operationally. So
Mm-hmm.
they'll make the acquisition, and there'll be a horizontal team, as it were, that working across a portfolio of companies. Sometimes that the private equity will be doubling down on a particular market or a sector, and start to group companies of a similar or complementary nature, and
Mm-hmm.
start to build a portfolio. And they might provide some horizontal kind of input and expertise. But from what I've seen of this is they rely very much on the management team of the acquired company and any appointments that they make or the board make of that new entity um, to drive the transformation. So there's some horizontal assistance and coaching that comes in, but it's a make or break objective with the company itself. So there's not a lot of micromanagement from private equity in this space, would be my kind of observation.
Makes sense. Yeah, yeah. So it's not like I think people listen to this, and certainly what we've observed is this trend of buy and build, where like a private equity comes in buys the majority share in the company, then injects their management team, CEO, whatever, and then they go and do whatever they want to it, implement new technology and pump as much as they can, and then eventually sell onwards from there. It's a slightly different dynamic that happens within AEC from what you've observed.
I think there are definitely turbocharged examples, but yeah, in general, I think from what I've seen, not just in AECs, a private equity organization is trying to uh, acquire a company that it thinks has a path to success, and
Hmm.
it might augment and flip certain roles, but it wouldn't be a complete kind of takeover and a run in it from a core private equity team. I think there can be an advisory team that will coach and help, but it's really about the merits of the people in the roles that are part of that acquired entity, and that can be some of the incumbents. In some cases, it's often a new leader and maybe some key hires.
Okay. Hey listeners, I want to take a quick break to remind you about the Bricks and Bytes newsletter. If you're interested in learning about the technology shaping the future of construction, you won't want to miss the valuable insights we share each week. To get this exclusive content delivered straight to your inbox, head over to www.bricks-bytes.com and sign up today. Link is in the show notes. Back to the show. Um, I was going to come back to a point you mentioned about how this ties into like the digital transformation of a company. Are these related? That the private. Okay, yeah. So maybe you can repeat this if I'm right here. So like a private company perhaps says they want to go and undertake a digital transformation, and then the private equity, you and your role working with the private equity company to value this digital transformation and see if it stacks up and makes sense for both sides of the coin.
Yeah, that's right. I mean, I think the question that many people are asking at the moment is, uh, you know, the basic hypothesis of a private equity company from scratch, pre-digital, is: can I buy this company and with the right level of change, can I do better with this company than the previous owners? So can I buy it and make money from it? And can I sell it again? Because private equity tend not to hold these entities forever. They're trying to make profit from that acquisition, turn more value uh, from that company so that it can be sold on in a different way. And so they're always thinking about, why wasn't it working as well as it could? Why was it suboptimal? How do we make it more optimal? And typical ways of doing that are just to look at the cost base and look at barriers to growth. And the new injection of cash can often solve the barriers to growth, so they can acquire uh, offices in new locations. They could potentially compete in different ways. They can acquire technologies. They can acquire people. So it's about, kind of, what does more money uh,
Mm.
achieve? Also, is there waste in the organization? So what waste currently exists in that
Hmm.
organization? How can that waste, and I don't mean people, I'm not talking derogatory around that, but like, there can be um, some costs that are traditional to the way that companies run, that um, are not prevalent or common in other competitors, and that's why potentially the private equity acquirers saw value. They kind of say, okay, well, we could do something differently. You then start
Yeah.
looking at scale. So you start looking at scale and you think, well, we're servicing the private equity portfolio is servicing a number of companies that look and feel the same. How do we get synergies between them? If they buy software companies that serve those types of clients, how can they get collaboration and get things working? So there's just a sense of value that can be achieved. So that's the way it's always been.
Mm.
And now I the question, okay, so how disruptive is the adoption of new agentic AI capabilities and just generally, doing a good job with a traditional digital strategy. Um, what does that do now to the company? And people are scratching their heads and trying to figure out, what's the maturity of the technology? Can it really deliver success financially? How do you scale it? And so um, the question is, do you want to buy a legacy business that's based on bums on seats and lots of people doing things that potentially within an event horizon that's not so far away, how much of that can be done through technology augmented by people? And if you're buying a, mid-size organization or a company that has, a certain footprint, could in partnership with the technology, could you utilize those people to do more with the
Mm.
technology that they could on their own? Does that allow you to achieve scale without having to buy, in a linear way, as many people to achieve the growth that you want? And in that, is there an equation that makes money, right? And then against
Mhm.
that, who else is doing that? Are they doing it faster than you? Are they doing it better than you? And will you make enough money to compete?
Mhm. Yeah,
We're at,
this
we're
makes
at the
sense.
stages of that kind of exploration, but it's just another dynamic. It's a new set of tools that potentially give people a competitive advantage if they're used correctly. And with that competitive advantage, how much value is achieved in that acquisition and when?
Mhm. Yeah, interesting. So, maybe we can get onto some examples of what you're seeing, like how these companies are like implementing the new technologies to, well, improve operational efficiencies and increase the value of the companies. Um, Before we go there, maybe a question it would be around like, what kind of like size companies would does this make, or is there most does this make sense? Like, is there like an area or trend you're noticing that is happening most? You mentioned tiers of companies earlier. Is it just
Yeah.
happening within the big companies and I don't know, tier two, tier three, all the way down to? I mean, we see more in like the popular culture boat that of people buying like plumbing businesses, which I suppose you could classify within the AEC industry under construction. So, yeah, any patterns you're noticing there?
Yeah, and it's a great question, right? So there are some demographics that are starting to come home to roost right now. So the baby boomer generation, so a lot of owners, proprietary owned companies, um, that level of ownership and what do we do next with the company? We're certainly seeing uh, that baby boomer generation look at exits. And so those proprietary owned companies, those so non-stock market listed companies, are potentially selling, and they're available. They can be acquired by a market leader like an AC leader, but they can also be acquired by private equity that are building a portfolio. And so, yeah, that's certainly a trend. And those organizations tend not to be, the 40, 60,000 people organizations. They tend to be at a national level, or if they're in the US, they tend to be, across a number of states, but not necessarily across the whole of the US. So they'll have a particular geographic relevance. So they might be on the East Coast, the West Coast. Um, if they're in Europe, there may be a dominance in a particular country. And so the acquirers are trying to, do they want a broader spread in Europe? So will they buy a market leader in one country, and then how would they join that up with another? Or are they buying a global company, but it might be mid-tier size, that has, a footprint. So it might have 5,000 people, 10,000 people, rather than the 40 to 60, 100,000 people, some of the leaders. So yeah, I think some of the
Mm,
consolidation from private equity is coming in at that sort of mid-tier level. But at the same time, the market leaders are also shopping, and they're looking for acquisitions. And I think the challenge is like right now, because of the investment that's going into this area, you can buy legacy businesses, and market share is really important. You don't necessarily need technology to achieve a safe bet in the sort of 24, 36-month horizon. But if you really want to optimize that acquisition and really take that forward, optimizing that using technology and thinking
mm,
about what's like the super consultancy type concept, like what is it we want to achieve with the right technology here, that can make a big difference.
mm, mm. Yeah, that's interesting to think about. So, how can you leverage technology to increase the value of these businesses, and in particular businesses that are like on with older ownership and could, yeah, don't really have a clear path forward. Um, what I was
And they're
thinking
great
about
businesses, like,
legacies.
they're great businesses, but they don't, they're businesses that will benefit from potentially doing more interesting work across a broader geographic spread with the people that they've got augmented by technology. That's the sweet spot.
Yeah. Yeah, okay. All right, let me just check my list of questions. If not, I'm going to ask you about technology.
Yeah.
Okay, we can go to digital accelerators. I think it'd be good to explore like that, how you actually do increase the value of a company through the use of technology. So let's go there. Um, Anything to that general statement to start with, Darren, about like things people do with technology, what types of technology? I know there's a lot of talk of AI and obviously how you digitize to humanize. I'm not sure if you've heard that statement before, but I think it's a great one to, how can we use these tools so people
Digitize
are
to
spending.
humanize.
Yeah, shout out to Mark Barone. He's the chief operating officer of Bureau Happold, who shared that one with me, where effectively they are using things like AI to help staff focus on the work that, or the tasks that need doing, that actually add value to the organization, not the so-called grunt work. So spending
Yeah,
more time
yeah,
with clients, spending
yeah.
more time designing, building a better culture for people to work within an organization, and so on and so forth. So what's your general sweeping kind of view on that?
Yeah, I mean, I'd agree with Mark. In the built environment, we are awash with people with masters, PhDs, and so on. Really, really smart people. But the way things get done um, can be meticulously detailed and not particularly efficient. And so you got to ask yourself, what's all that intellectual horsepower best left to do and focus on, and solving the things that are more complex, that need their super brains applied to it, is where the value is, I think. And so there's a lot of mundane, routine work that can be automated. I think we've got to be really clear on, what's the risk associated with that? How do we keep people in the loop to give assurances around the quality of that work? But yeah, freeing people up from the mundane to do the things that they dreamt at when they were studying and dreamt about being engineers is really important. But also, but we spoke about what's holding back some of the scaling is, in my view, in this industry, we have an abundance uh, of very smart people, but not necessarily commercially focused people. That, an MBA, the word sales, MBA, commercials, and so on in our industry is underplayed, and
Hmm.
translating innovation, efficiency, the cannibalization of labor into value for an end client, and being part of that journey and sharing in that reward is, it could be better understood. And so whilst we can be, absolutely perfect at designing things, really complex structures, you know, bridges, railways, nuclear power stations, and so on, that are really safe and precise and drive great output, we don't necessarily have the commercial kind of focus to make sure that that innovation leads to value for the people that are a part of that
Mm,
ecosystem. And uh, I tend to focus on that area. It tends to be one of the
mm,
areas a lot of help with clients and turning, what does this technology mean for an AC? What does it mean for a software company? What does it mean for the owner? And I've been talking for a long time about, if you look at the analogy of a company that wants to build a stadium where you can go and have a concert, for example. So, a concert hall. The idea is you build the concert hall really quickly so that your favorite bands can come and play it there, and you can get fee paying uh,
mhm,
audiences and get into that. So some of the questions that you got to be asking yourself are, how can I build that to the right quality as quickly as possible? And there's a lot of effort that goes into, there's a lot of technologies now to optimize schedule, to avoid rework, and there's AI capabilities that help with that. So how do you build it quickly? But then how do you run and operate it in the most efficient way? So the minute that stadium is commissioned and somebody comes and cuts the ribbon, you can have your concerts and you start generating revenue from the audience. So to me, it's really about, how do you optimize that process? The sooner it becomes a live concert hall and people are coming in, everyone that helped make that happen should be rewarded. And if you're bringing something to the table that
mm,
changes it dramatically, so you can build that concert hall, you know, 4 times faster than before, how do you avoid that being a commoditized effort? Um, and so I think we have the potential to build things much faster, but we don't necessarily have the reward mechanisms to allow us to do it. And we see pockets of brilliance where it's been done once, but the path to value by the people that know how to do it and the people that own the asset and want to pay for that asset to come live, that connection isn't as clear as it could be. I think it's definitely there, and some people are really switched on and working in that way. But for others, it's still a bit of a muddle.
mm. So is this something that you're, like, exploring then with, when you are advising, like, companies at the moment? Is this something that can tangibly be done, do you think?
Yeah, I mean, look, it's all about people are coming at different angles, right? So, if you're selling software, for example, you're selling software at a different. You've got slightly different functionality to your competitors. You've got a slightly different price point. You might have some better marketing and better salespeople, but you're all kind of, competing in the same space. If there's an opportunity to really show that you can implement a technology that drives real value and to demonstrate that quickly to help the client that you have um, scale quickly, and you start to tie yourself to their success and their outcomes, um, you're having a different conversation than, what's my functionality look like and what's my price point look like and, what does our support contract look like and so on. So I think that's really where the path to value becomes meaningful. And there
Mhm,
are some organizations that want to invest in that, like they're reaching a ceiling. They've had early success because their technology might have been novel and different to the traditional players, but they're kind of hitting a ceiling of, so what now? And that unlocking that question and getting scale beyond particular projects in a particular country is really powerful. and that allows for more investment. So, I think we're talking later around, the step between Series A, B, and C funding and what's needed.
Mm.
And some of those false positives are, there's lots of excitement because we've set up a project in a certain region and we're getting some results, and that doesn't translate to a corporate decision at leadership level for that technology to be deployed in anger, and that holds back the software vendor. Um, and that's partly because the decisions in our industry can be made at a very disaggregated way, project by project. So it's hard to get scale around that.
Mm.
But if you're tied closer to the direct outcomes that the board and the exec are trying to achieve, and you can demonstrate that you're connected to that, um, there's a much stronger possibility that you can drive enterprise decisions about using your technology versus someone else on another project that thinks that, you know, the competition are better, and you just get into tribal discussions about which software is better rather than how do we get to the outcome and
Mm.
who's invested in that outcome.
Yeah, you're leading me down. I'm gonna follow your lead here on and go down to down this path because it's a discussion that comes up a lot, and we see that the companies that do achieve scale are the ones that are able to tie the value or outcome that their software provides at that corporate level. So, Darren, as someone that has sat there in those seats before and probably had the conversations about like enterprise wide adoption of softwares, and now someone that's advising companies potentially about how they could get their softwares um, adopted by enterprise. You mention tying value outcomes at the exec and corporate level. Um, are there any other pointers here aside from that? If not, okay, yes or no on that point.
Yeah, I mean, there's definitely being really clear about what value your technology brings, and being able to deploy that potentially with a client that doesn't have the right team to land that result in the way that you're confident. So, what is the success team that you have? Are they really able to land the pilot, demonstrate proof of value and accuracy really quickly, and then build out from there? Are you having conversations with people in the organization that want to hear that result and will make scaling decisions as a result of that? I think that's really important to qualify it, kind of, and go from there. Otherwise, there are lots of transactions with projects that don't necessarily lead to scale within an organization.
Mm-hmm. Yeah, fine. Okay. So then, okay, question here. So if the objective is for these companies to to tie their outcomes of their products with the corporate level, do they? How much of it is show not tell? Like how much of it is just like perhaps the sales effort to say, oh yeah, we know your pains at that level, and we can do it. Versus that should they be having to prove value at an earlier stage? Like maybe it does start at the project level, then they just naturally scale up into the um, boardroom.
Yeah. So just give me that question again. Sorry.
So how much is it? How much of the is it on a sales side? So the company that is trying to sell their software to you is like, right, yeah, we can achieve your corporate outcomes. So telling you they can versus them actually showing you. So have they've proved value
Yeah.
like on a project before, or I don't know, what they've sat down with one of the execs who's sat on that board making these decisions and
Yeah.
literally
Yeah.
showed them the product.
Look, feature-rich demos. Um, I've been involved in product selection and technology selection for throughout my career, and I've never really been that interested in the functionality of a particular tool. Obviously, we don't want users looking at something that is just outdated, and the ergonomic and the human experience of using that tool just slows them down. But it's really being clear on, what does that new tool do that allows us to, if it's about safety, are we going to keep people safe as a result of using that technology? What's stopping us from scaling that if it's working? And I think that's the response. I have been client side uh, probably for around 10 years now in terms of, leadership roles. Is see, part of the job is, what is it that's, if this tool is really doing what it says it does on the tin, how do we partner with the vendor to get it across our organization? What's stopping it from happening? Are we really clear on the cost of not implementing this at an executive level, region by region, and where is the sponsorship to make it happen? I've seen great sponsorship at a leadership level, but it sort of falls over. By the time you get to level 2, level 3 in the organization, the people that are really accountable for making it work, um, there are so many competing day-to-day problems that they're trying to solve, even though, if, for example, implement a technology will save lives, it will prevent delays, it will prevent reputational damage. If, applying technology Y will reduce rework and improve the schedule by 10%. By the time we kind of need to execute that in a consistent way, the people left to do that implementation are often competing with other real world problems. And they're often in the construction industry, particularly general contractors, they tend to be great at solving here and now problems and not necessarily given the mandate to help turn and pivot the company at an enterprise level. They're accountable for their project, their P&L, their timescale, their client. And some of the stuff you're asking them to do is competing with other real issues. They might have a labor problem, there might be a supply chain problem, there might be a weather impact that's hitting them. There may be a pricing point that was involved in the bid that stops them from having the discretion to invest and innovate in their project. So what I don't always
Hmm.
see happening in the way that I've seen in other industries. I've worked in a range of industries before, from manufacturing, um, energy, and retail and banking. Is that there isn't necessarily the discretion at an enterprise level to invest in a step change that you see in some other industries. And that's why, I've been quoted before that the ACs tend to be a lagging industry. So I think there's that crunch point between what do we need to do things differently at a impactful level in a consistent way across multiple projects once we know the technology is going to work. That's that bit, passing
Mm.
the baton from pilot to, getting a bit of momentum, which then allows some of the vendors to get more funding to make their product even more sticky and appealing, to then say, no, actually, we're really behind this. Like, we're going to cannibalize our labor. We're going to grow in new markets because we've used the technology instead of getting our people to do the mundane things that we used to get paid for to do, because we really want to disrupt in this space and we're invested in that. Those tend to be top down decisions that don't necessarily translate to execution, and it's bridging that gap that's really important.
Yeah, and that's really tricky actually for any person or start or vendor that's in that situation, because you almost need this perfect storm to be brewing, where the company has the person you're selling to has a need, they have the resource to allocate to it, like they're not distracted by all some of the things that you mentioned, labor, weather, political needs that might be pulling them in other directions where they can't put the focus into actually scaling a software across the organization and so on. And I guess, to be honest with you, like this comes up a lot in our conversations as well. A lot of it does come down to luck, and that's one of those parts. Don't get me wrong, you make a lot of your own luck, but that is one of the, like, so many things have to be aligned for you to, or for companies to hit that kind of curve where suddenly, yeah, this is really going to start to scale. Would you agree?
Um, I I don't think it needs to be that mystical. To be honest, I think it can be more purposeful, right? So
Mm.
if an organization really wants to do something, I mean, the engineering industry and the built environment industry is solving hugely complex problems all day long, right? Um, and so getting to a point where technology is allowing our brilliant minds to do the really valuable things that they were trained to do, um, rather than some of the mundane things, and then trying to use that outcome that we've now commoditized some of the boring things that we used to do, or the repetitive things, turning that into competitive advantage. That's where, as I say, some of the MBA thinking and some of the commercial thinking um, isn't as strong consistently as it could be, and also client relationships and client value discussions. We tend to want to talk about quality and price points and consistency. We don't actually talk about, you know, how do we get that concert hall open as quickly as possible, and screaming fans coming in and buying merchandise and all of the
Mm.
value that achieves. And how do we get to that price point using brilliant minds quickly? Or do we just kind of stick to the fact that the commercial model typically is time and material from a build perspective and a design perspective? So how do we get to that point where we can drive a living, breathing concert hall with adoring fans coming in? We've optimized the design of that, so we've got the maximum value and price point for seats and boxes in that design, and we've done it in a way that was really aligned to achieving the best for the owner, and not necessarily perpetuating a model that ultimately has to and will change. And it's just, who's making those changes? There are some smart owners out there. There are some smart private equity companies out there, and there are some smart kind of software vendors out there. But yeah, it's. I don't think you need a
Mm.
mystic alignment of all the planets to make it work. I think you just got to be really focused on what you're doing, and you don't want, as I say, you don't want to be doing this across 57 service lines. You want to be doing it in a really focused way and going pretty bold with it, would be my guidance.
Mm. Yeah. Interesting. My brain goes to on your point. I get it. I think it's a sensible suggestion that we should incentivize everyone to want to complete projects quicker. Um, but do we not? I think we're quite guilty of this. Maybe not just not in construction, but in the world. If we find a few months of saving, say in a project, do we not find like another distraction to fill that months up with, like those months up with? Like, I don't know, it could be the technology that people are, one technology saves you more time, but then what do you do with the spare time? You probably you spend more time looking for other stuff to save you more time. And then like the question is like, oh, okay, so
Yeah, I
what
mean,
are you
we're
actually
kind of
doing?
we're kind of getting into human nature here, and kind
Yeah.
of. But I think if you think about some really simple problems, right? So if, for example, you're a big company and you're making loads of money from a service that hasn't been transformed, and you're starting to see that you're winning less work because either lower cost providers that don't offer the same quality as you are able to win that work through labor arbitrage. They might be using less quality and safety standards. They might be putting people at more risk. And from a brand perspective and an ethics perspective, as a global company, you may choose that, something that you absolutely will not compromise on. You're still seeing market erosion. Um,
Mm,
you may be an organization that can deal with that market erosion through the ability to invest in a technology. And for me, you know, having people that cut corners and cost less is one way of winning work. But that's a race to the bottom anyway. So for those higher quality brands, do they have enough following wins in their brand and the momentum that they've had, that when things start to erode, can they think about and invest in doing things differently, using technologies that allow some of that work to be done effectively once you've made your investment and you've considered that, at the click of a button, you can potentially do things in less than a second that would take days, weeks, months. So if you're the leading company that can invest in that way, um,
Mm.
you don't need to go to bed worried at night that people are undercutting you at a labor arbitrage perspective and using, you know, uh, certain lower cost uh, offshore centers, for example, where the consistency and quality that you want to give to your client isn't as reliable as you would like it to be. So getting that balance right, if you can use technology, it can potentially do things in seconds at relatively zero cost compared to the human cost it would take to do that. You got to ask yourself why isn't that happening in our industry as fast as it is in other industries?
Okay, Darren. Okay, cool. So I think we're probably just out of time here. So thanks for that. Very insightful. I think people would have got a nice in sort of like overview really of the private equity world and then how companies are considering technology to improve their operations. Also how companies from the technology vendor side should think about scaling their organizations and even some ways that they can do that. So to wrap this up, I think it would be good for you to tell us whether there is any initiative that you're running at the moment, anything you want to plug, or if not, you can just tell people where they could find out a little bit more about you and some of the work that you are doing and are involved with.
Yeah, sure. All right. Well, yeah. So I started out with AInvested in May, and at the time I was at a dinner in Miami with some of my peers, and I kind of mentioned just quietly at that point that I was going out on my own, and since then I've been working just with a handful of people that know me and have asked me to help. Um, but I'm interested in expanding that area, and so I'm available for on LinkedIn and through my email Darren at AIinvested.com to engage with people and explore what's their challenge and how might some of my experiences and my network and my supplier base add value to their journey. And so, yeah, kind of interested in people that would like to learn more and potentially collaborate. So, like I say, so far it's been really low key. It's been keeping me busy and it's been fun. But
Mm,
looking to explore any interest that comes from this podcast, and if there are people that want to collaborate, happy to do so.
awesome. Darren, thank you so much.
Yeah, no worries. As always, great to talk to you